All right, real talk. Imagine a company that sells hair loss pills, skin creams, and therapy sessions online. And Wall Street is slowly starting to realize it might actually be a tech company in disguise. Sounds kind of weird, right? But here's the crazy part. This little known wellness brand, yeah, the one you've probably seen on Instagram, is quietly building one of the most disruptive business models in healthcare today. They're growing faster than most software as a service companies. They've got 90% recurring revenue. Their margins, ridiculously good. And somehow, almost no one's paying attention. So in this video, we're breaking it all down. What they do, how they make money, why their growth is so explosive, and why I think this might be one of the most underrated stocks in the market right now. If you've never looked into HIMS before, you're going to walk away from this one thinking, wait, how did I miss this? Let's get into it. So, all right. On the surface, HIMS looks like a wellness brand. You've probably seen the ads, hair loss treatments, skincare kits, ED meds. But here's what most people miss. This is a digital healthcare company, vertically integrated, tech-enabled, and laser-focused on solving the most common and most stigmatized health issues online. They own the customer experience from start to finish. Online consults, discreet prescriptions, and delivery to your door. No awkward doctor visits, no pharmacy line, all digital. It's like the Apple Store of healthcare, but for men's and women's everyday health needs. And that's where the genius lies. They aren't trying to be the next hospital. They're owning the low-friction, high-frequency stuff that traditional healthcare sucks at. Let's zoom out. Why does this even matter? Because the markets HIMS is tackling are massive. SEX Health, 40 billion plus. Mental health, 100 billion plus. Dermatology, 50 billion plus. Primary care, 250 billion. And those are US numbers alone. Add in the global shift to telehealth, accelerated by the pandemic, and this becomes a tailwind on steroids. McKinsey reports that telehealth usage is 38 times higher today than pre-pandemic. HIMS is perfectly positioned. It's digital first, stigma-free, affordable, and it knows how to sell to millennials and Gen Z better than anyone. You're not betting on pills. You're betting on the platform for the future of healthcare delivery. So let's talk receipts. What was their 2020 revenue? 83 million. What was their 2023 revenue? Over 870 million. And we're now tracking towards $1 billion in revenue. And 90% of that revenue is recurring through subscriptions. That's right. HIMS isn't selling one-off products. They're building compounding customer relationships, the kind of flywheel that software as a service investors drool over. And margins? Up to 80%. Let that sink in. And get this, they're already profitable on an adjusted EBITDA basis, which is insanely rare for a company growing this fast in a market this big. This isn't a money-burning growth story. This is a disciplined, margin-focused machine hiding behind a wellness brand. All right, but couldn't someone just copy them? Good luck. First, HIMS is vertically integrated. They've built their own digital platform, own the pharmacy fulfillment, and streamline doctor consults all under one umbrella. That's not easy to replicate, especially not at scale. Second, regulations. You can't just spin up a telehealth brand overnight. Each state has different laws. HIMS has been navigating that web since 2017. It's a compliance fortress. Third, brand. You can't fake trust. HIMS has spent years becoming the brand young people actually trust with their most personal problems. From SEO dominance to social campaigns, they've built a relationship with their customer that's incredibly sticky. You might see competitors, but you won't see another HIMS. Let's talk about the guy running the show, Andrew Dadum. Not a suit, not a doctor. A Silicon Valley founder with one goal: make healthcare feel more like Netflix than a nightmare. He's young, ambitious, and owns a ton of stock, which means his incentives are in line with yours. And the roadmap. He doesn't want to just sell more pills. He wants to make HIMS the default health experience for millennials and Gen Z. Mental health, weight loss, skincare, even primary care. That's not a niche. That's long-term, repeatable, trust-based business model. Okay, let's be real. No stock is risk-free. HIMS faces rising competition, reliance on paid ads, and potential regulatory changes. But here's the thing. They're adapting fast. They're shifting towards organic growth channels like SEO and influencer partnerships. They're expanding product lines to increase customer lifetime value. And they're still small enough to pivot, experiment, and win. This is not a fragile business. This is a resilient one with options. So, what's the price? As of now, HIMS is trading under a $2 billion market cap for a business with $1 billion in revenue, 80% gross margins, and 90% recurring subscriptions, and a profitable trajectory. That's criminally undervalued. If this was a software as a service company with the same metrics, it would be trading at 8 to 10x revenue, easily. HIMS, around 2 to 3x. Wall Street still thinks it's a glorified e-commerce brand. Perfect. That's our edge. If they hit $2 billion in revenue, turn 20% into net income, that's $400 million in profit. Slap a 20x multiple on that, you're looking at an $8 billion company. That's a 4x from here. And that's conservative. So let's play out the what if. What if HIMS becomes the trusted digital health brand? What if millennials start using HIMS for therapy, weight loss, skincare, prescriptions, and never look back? What if the next generation never steps foot in a clinic for anything short of an emergency? We're not just talking about solving awkward issues anymore. We're talking about owning the front door to healthcare. And if that happens, this isn't a $2 billion company. This is a 10 to 20 billion juggernaut in the making. So here's where I land. HIMS checks every box I look for. Big, growing market, product people love, recurring revenue, high margins, founder-led, profitability path, and undervalued. There aren't many stocks that give you all that and the upside of a category-defining brand. Am I saying you should YOLO your entire portfolio into HIMS? No. But would I blame you if you did? Honestly, not really. If you made it this far, you're clearly as obsessed with me with this stuff as I am. So here's the ask. Smash that like button, subscribe for more deep dives, and drop a comment. What's your bull or bear case on HIMS? Let's talk. And remember, this isn't financial advice, just one obsessed investor sharing what I see. But hey, sometimes the best investments are hiding in plain sight. Catch you in the next one.